Okay, well, it looks like it's 8:30, and this is Pete Hoyt speaking here, and we're going to get the show on the road here. To begin with, you should be seeing my picture and my partner in the upper right-hand corner, the two good-looking smiling guys. That's me and Sonny Decker. And you should also be seeing on our introductory slide here our phone number, 941-747-5858. And we have a number of our people here at the office this evening, so anytime you want to call us, got any questions or about the software, by all means give us a call. And you might want to jot down that phone number, but it will be at the bottom of all of our slides. Also on our slides you should see our website, bestchoicesoftware.com, where you can go and download a free demo of our software. Don't do that now, but again, after the broadcast is over or tomorrow, you might want to go there and check out our website. Now, like I said, if you have any questions, you should have a text box where you can send some questions or comments. Our head programmer, Brett, is monitoring the chat box. He'll probably join me from time to time. And we did a similar webinar to this a couple weeks ago, but unfortunately we didn't record it. Hopefully we'll try again this evening and get everything working fine. So with that, let's get started. I want to start by at least letting you know who I am. So let's go to our first slide here. Let's see. Okay, this is a little bit about my background. First of all, I've been in the markets for over 50 years. I programmed computers for 48 years. Back when I was in college, it was a long time ago, but that was the beginning of the computer age, what we now have on our desktops. But back then it was a giant room with big spinning wheels, and it was a lot more difficult writing computer programs than it is today. But at any rate, I went to the University of Connecticut, where I got a degree in chemical engineering. My father was very influential in getting me started in the markets, certainly, because back in the 50s he was managing a $80 million trust account, and he taught me a lot about the markets. And of course I used that with the combination of my knowledge from college and so forth in building, starting off Best Choice Software. I've taught at 4 different universities, everything from math, science, statistics, and computers. So pretty expert in this, and I've developed and I'm a co-owner of Best Choice Software for the past 16 years. Okay, so tonight I'll cover what is Best Choice Software. We're going to start with maybe a long-term view of the markets. I'll talk about how to time the markets, how to make money in the markets, seasonality, which is a really cool tool that we have. I'll show you how that works. Picking the right stock options, and then we're going to have a question and answer session. So starting off, what is Best Choice Software? Well, Best Choice Software is a financial program to help you to find great securities at the right time and make money. That's what it's all about, making money. And in order to do that, we have to find the right stocks at the right time. So we have over 35,000 U.S. and foreign securities in our software. And we have 2 search wizards to make your searching easy. But in using the search wizards, first and foremost, you have to kind of know what it is that you're searching for. So our software finds the best quality stocks for long-term investing, but you kind of have to know what a great long-term stock looks like. So I'm going to go over some of this with you and show you some good candidates, and so you kind of know what you're looking for when you use our wizards. The software also finds the right time to buy or sell stocks using our 3-line chart and our seasonal charts. It analyzes stocks for options, and it covers commodities, ETFs, and futures. So let's start by looking at the long-term view of the Dow Industrial Average. Now here we see the very first chart. This is kind of what a chart in Best Choice Software looks like. And this is the Dow Industrials from 1972 to 1982. And what we're seeing here, like all charts, the prices of stocks go up and down. and we see three yellow lines. The center line is the average over that time period. And essentially, during this 10-year time period, the stock market did nothing but just bounce up and down. It was a time period where we had with no growth and high volatility. Now, in developing these three lines, the key thing is we can see over in the right-hand corner that we have a measure of how consistent, the measure of the volatility. If something is bouncing around a lot, it has a low price consistency. If those prices were all straight along that center line, it would have no volatility. So our three lines show us a measure of volatility, and in this case, the Dow had no growth. Now, if we step forward in time to 1982 through 2000, this again is another chart of the Dow Industrial Averages, but it looks very, very different. This was a time period where we had great growth. This was, if you recall, back in 1972, this was when Reagan was president, George Bush Sr., and Clinton. So we can see that here we have a price consistency a whole lot higher, that the data basically is closer to a straight line. Now, why is that important? If we're a long-term investor, let's talk about long-term investing first of all. We want relatively stable growth. It's just like if you put money in the bank. If you put $100 in the bank, and let's talk about volatility. The next day you go to the bank and they say you have $105. Well, you're pretty happy, but then the next day you go there and you have $95. The price is bouncing around a lot. It's not a consistent pattern. You wouldn't be very happy putting in money in a bank where you have a lot of volatility. So these three lines give us a measure of how volatile that stock is going to be. Now, if we step forward some more in time, this is the Dow Industrials from 2000 to 2009. Again, it looks very much like the 70s, period of the 70s, where we had very little growth, and the stock market had a lot of volatility. Now, we can see in 2007 where it got way above our upper line and then collapsed down to 2009. That was the big real estate bust, and of course since then we've had a fairly good market. If I show you the last 5 years, we can see high volatility during this time period and no growth. But over the most recent 5 years, we can see we've had a pretty good stock market. We can see the actual price growth rate is around 13%, and the volatility is relatively low. So that kind of gives us some sense of when we look at charts, we want to know something about the volatility. We want to know something about the growth rates. Now, let me talk a little bit about growth rates on money. Here is a chart on the growth of money. Let's say you have your money in a bank and it's drawing you 1% interest. Well, 1% on $1,000, we look in the upper left-hand corner. At the end of 1 year, you'd have $10 in interest. So you'd have $1,010. Now, the next year, you're starting with $1,010, and then you have $1,020.10, and so on and so forth. So at the end of 10 years, with a 1% growth rate, you would have a total of $104 in interest. Not very much. Your money is basically just sitting there, and that's at 1%. Now look at the difference at 50%. 50%, your money is working for you a lot harder. You end up with $57,000 at the end of 10 years, and look what would happen at 100% growth rate. Okay, on the 100% growth rate over here, we can see that it's gone from 1,000 to 2,004 and so on down to $1 million. So obviously there's a huge difference, and it's not just 100 times the net result of having a much higher return. Now, if I plot this on a chart, notice that we have what a 100% growth rate looks like. It looks like a hook. In mathematics, this is called an exponential curve. This is a growth curve. This is what we want our money to do when we're in an investment. We want our money to appreciate over time. And we can see this green line here is the 50%, and then this red flat line down here is the 1%. Now, if we take this exact same information and I show it on a logarithmic scale, we can see that growth is in a straight line. That here is we can see the 100% getting up to $1 million, the 50% getting up to 50 some odd thousand, and then here I'm showing 10% just to show something off the bottom line here. But when we go to the log scale, the value of this is we can understand the growth rate. It's a lot easier to see when we're using a straight line. Now, on our charts, let's go back to our charts. Here is a chart of Priceline over the last 10 years or so. It looks just like our upward hooking line that I showed you before earlier. And look at Priceline. When we had the collapse back in 2009, here's the collapse on Priceline. Look what it's done the last 5 years. This stock has absolutely exploded. So this is a stock with great growth. It looks just like the hook that I just showed you. Now, when we take this information and put it on a logarithmic scale, okay, this is the exact same information except it's on a log scale where I can calculate the growth rate of Priceline. Priceline is a great stock. This is like what I said to you earlier. When we're using our search wizards and we're looking for great growth stocks, you got to know what they look like. This is what one looks like. Relatively stable growth over the years, and it's been appreciating at 53% compounded annually. It's like having your money in the bank paying you 53%. That's pretty gosh darn good return. So this is our 3-line best choice chart that shows us a lot of great information. Here, if you look over in the legend, we can see the price growth rate on this particular stock. Let's see just a minute here. Okay, we can see that the price growth rate is 57%. Now, if I come down to the next slide here where I'm showing you the earnings of Priceline. This is over the same time period, over the 10-year time period. The earnings are growing at 57%. So no wonder the price is appreciating that much. The company is making money. And so when we put the two of them together on the same chart, we can see price and earnings together on this particular company on the same chart. This is the original concept that I built 16 years ago. This is what I wanted to see on my stocks, where I could understand the relationship between price and earnings, what's taking place. And so this was our first best choice charts that we sold years ago. Now, let's talk a little bit about those 3 yellow lines, and let me show you how they work. The 3 yellow lines, they show us the growth rate over that particular time. They're a measure of the volatility, and they show us what's most importantly is highs and lows, which are buying and selling opportunities. We always want to buy things when they're low and sell them when they're high. So these lines generate extreme levels where above that upper line prices are relatively too high, and below the lower line prices are relatively cheap. Did you ever hear the old saying, buy low and sell high and you'll make a lot of money? It's very true, but the average person doesn't know what high and low mean. You know, when is it high? When is it low? Well, this is why that center line, we calculate the average, and then compared to that average, the upper line is high and the lower line is low. We know what high and low are. We've defined them. And so the extremes are a really cool concept that we built that tells us a daily rating of price between 0 and 100%. So if something's close to 0, I know it's relatively cheap. And if something's near 100%, I know it's relatively expensive. So let me show you how this works. on price line here. Okay, let's start off here with the chart of price line. Now, if we just look at the 6-month time period, we can see time periods in the past where it was relatively cheap below the lines. You see these time periods that I'm pointing out here, and above the bands where it's relatively expensive. This is basically the path that Priceline is making, and I've explained to you why we use an exponential, or excuse me, a logarithmic chart. But buy, sell, you see how this works. So basically we're here on November 7th. We see the price extreme is 0.4%. It's very, very low. It's a buying opportunity. Now we go to the next chart. What do we see? Now it's above the upper band, and look at our price extremes, 96%. Well, okay, our rating goes from 0 to 100. So the upper line is set at 90, the lower line is set at 10, so when it gets above that upper band, it's expensive. You just had a 189-point move from the bottom to the top of the bands. Now let's step forward again in time. Okay, a few months later, look at Priceline. Now it's way below the bottom band. You can see over here. Now you could say maybe over here, well, why wasn't this a buying opportunity? It was. Pretty much anywhere's over here, the stock is relatively cheap. Again, it's a relative concept. The center line is the average. Up here, it's expensive. I know what expensive is. Down here, it's cheap. We just had a 79-point move to the downside. All right, let's move forward again in time. Okay, here was our buying opportunity. Now we're above the upper band. What is our extreme telling us? We're at a 96% extreme. The stock is relatively expensive. We just had a 244-point move to the upside. What do you think, folks? Is it time to buy or sell? You tell me. What is the chart that we're looking at telling you? It's time to get out. Okay, let's step forward again in time. And guess what? We're back down below the bands again. Our extreme is relatively low. We just had a 175-point move to the downside. We've caught this thing going up. We've caught it going down. We've caught it going in both directions. So I have taken you step by step, showing you the power of the extremes generated by these 3 yellow lines that we put on the charts. The computer does all this stuff automatically for you. It makes trading very easy. So on that price line move over the 5-month period, there were 4 trades producing 687-point move. Okay, these 3 lines are concept I developed years ago, and they're only available through Best Choice software. It's something that, you know, that we pride ourselves with. Now I'm going to show you some other great tools that we have in our software. So there it is. There's the complete picture. Now, how do we know in advance when a stock will normally move up or down? You ever think about that question? That's what all traders want to know. Man, if I know tomorrow a stock is going to go up, I want to buy it. If I know tomorrow it's going to go down, sell it. Now, you ever see that movie Back to the Future where these kids go into the future and they're 50 years in the future and they get a sports almanac and they come back to the present, and now they know in the future who's going to win all the World Series and Super Bowls, and then it shows them as billionaires because they know who's going to win and they bet on it. Well, Best Choice isn't quite that good, but we built a tool to help us peer into the future. And how do we do that? Well, we look at repeating patterns. In other words, something that's happened over and over and over again. So let me show you. It's called seasonality. So our seasonal charts, this is a new type of chart that we built, and again, it's a proprietary thing. It will tell us the probability that a security will move in a specific direction for a defined length of time before it happens. Now, isn't this what you want? Again, this is probability. This is not a guarantee because nobody knows the future with absolute certainty. But if I asked you, when is Christmas going to occur this year? It hasn't happened yet, has it? but you would know with absolute certainty that it has always occurred in the past on the 25th of December. So most likely that's what's going to happen this year. It's a repeatable pattern. So we want to know this ahead of time. So here's the question. Would you buy a security if you knew it had gone up 10 out of 10 times during the exact same time period in the past? And you're coming up to that time period now. Does that sound like a smart trade to take? All right. Well, let me show you an example of how this works. Here is our seasonal chart of, this happens to be Netflix. It's an odd looking chart. First of all, what you see across the center is this jagged looking yellow line. It goes up, it goes down, and we see dates on the bottom from January to December. It's an annual chart. And what that yellow line is a composite of the history of that stock. Now, it takes the 10 years of Netflix and basically puts it into one line that tells us what the stock normally does. Now, you can see that there are green dots. That is when the earnings come out. Here in January, the earnings comes out. There's a series of green dots. There's a series of green dots here in April. There's a series of green dots in July, and there's a series of green dots in October. The earnings are not, why do we have a series of green dots? Because the earnings are not announced on the same day every year. You got Saturdays and Sundays that can shift things. So that's when they've been announced in the past. On what day over the past 10 years. If it's been announced the same day twice, well then, okay, you got one green dot. But we see approximately when the earnings are announced. Now, if we look at these 4 time periods, notice over here in January that after these earnings are announced, the stock has a jump to the upside. Over here, it moves slightly down. Here, when the earnings are announced in July, generally afterwards, the stock moves down. And over here in October, when they announce the earnings, the stock goes up. Well, that's pretty important information for us to know. Now, let's focus on this January time period. Okay, if we drag our mouse, now this is just a PowerPoint, so I'll show you this during our live presentation, when we open up the charts. But if we drag our mouse, it shows us these 2 lines to select the time period that we're interested in. And when we do that, what happens is it shows us the line turns green, which is the time period in the case of a great trade, and it tells us information in the legend on the right. Now over here, if you look on the right side of the chart, you'll see the symbol Netflix. It says it has leaps. The start date is January 20th. The end date is February 3rd. The stock has gone up 10 out of 10 years. Every single year it's virtually done the same thing. Now we can look down here at the bottom. We can see all 10 years. And we know the time period. We know that the average profit is 20%, a little bit more than 20%. That means that the stock, if it was a $100 stock, went up to 120. If it was a $1,000 stock, it probably jumped $200 to $1,200. That would be a 20% move. So each year, we're looking at the percentage of the movement of the stock, not necessarily the dollar amount, but certainly we know that we're looking at a 20% move. And we can see in the past, this has been a pretty nice looking trade to take. And we know it's coming up. So let me show you what happened. So essentially, we knew ahead of time on this trade that Netflix had gone up 10 out of 10 years. We knew the time period when the earnings were being announced. We knew the average move was about 20%. Now the earnings this year, when they were announced in January on Netflix, and I think this next week the earnings are going to be announced again on Netflix, but in January, the earnings were being announced on the 22nd after the market closed. Okay, the stock was a $330 stock. So if we're expecting a 20% move, what is 20% of 330? Well, it's exactly $66, but you know, strike increments are in this case are $5 apart. So $65 is the estimated move. Now, like I say, the strike increments are $5. So if you're expecting a move of $65, that is a 13 strike move. Now, hopefully everybody that I'm talking to this evening understands options, that essentially options, there's strike increments, which is the levels which you can purchase for the expiration. On an expiration date, if it's above that, you have a profit. If it, as far as a call goes, it's delivery at that price level. And so in this case, we're talking about a 13 strike move. Now that's a huge move. So needless to say, at the office here, when we're looking at this in Best Choice Software, I'm taking the trade, my partner Sonny's taking the trade, Brett's taking the trade. We're all excited about this stock. It's a great opportunity. It's a repeatable pattern. So the actual stock move was a $55 move. Now that's a killer move, and that's overnight. Now, I don't know what other software can show you this kind of stuff, but Best Choice Software can. And we made a fortune overnight. Now let me show you what the calls did from one day to the next. Okay, the announcement, like I said, was after the market closed on January 22nd. So you had to buy your options before the market closed. Now I bought mine at 3:30 in the afternoon. The option market closes at 4 o'clock. So let me take you a little bit over the chronology of this particular trade. Now, okay, we had to place our trades before 4 o'clock. 4 o'clock, we're done. If you didn't get it by 4, forget it. You missed it. Wait till next year, or wait till another opportunity presents itself. So we knew that the announcement was going to be made at around 4:05. So here we are by our computers. We have our monitors open, and we're watching the price of Netflix, and all of a sudden the stock takes a big jump in the after hours. Now, we can't trade it because the options markets are closed, but we knew that that stock just had a major jump. We didn't even know what the earnings were. All we're doing is looking at price movement, and the price had a huge move. So the next day, it was $55 higher, and we can see what happened with our options. Now here's our strike prices of all these different options, from 325 all the way down to 390. This is what it would have cost us, or had you taken the trade. This is per share of stock. So if I'm looking at a 325 strike at $21, that's $2,100 because the options are traded on 100 share lots. So this option down here would cost you 92 cents, which would be $92. So it's not that expensive. But what do you have the next day? You got $345, which is a 275% return overnight. Now we can look at the returns over here, the percent returns. So all of these options, you know, people say, well, should I? They're all, for the most part, out of the money options, with the exception of the 325 up here. This is an in the money option, and that is actually the lowest return. Now, when we were looking at Netflix, we were expecting a 20% move, which translated to 13 strikes. Supposing instead of a 20% move, we were only looking at a 2% move. Well, could you go 10 strikes out of the money? Certainly if you're expecting a 13 strike move, you could go 10 strikes out of the money. But if you're only expecting a 1 strike move, is it realistic to go out 10 strikes? No, it's not going to happen. So this is how we can look at the movement of the stock, because the options are a derivative of the underlying stock, and we can estimate how far we can go in which options to select. So we get all this information from our seasonal charts on what we can expect coming down the line. This is incredible. This year I took Netflix. The next month I took Priceline, CMG. You know, we can go right on down the line. There was a lot of great earnings plays this year. And we're getting into earnings season right now. Okay, so the question becomes, okay, I just showed you a great trading stock like Netflix. How do you find these guys? Like I told you in the beginning, there's 35,000 different securities. Well, the first thing we got to do is kind of whittle it down. And what we do is we use our search wizards to find our trades. Now, this is what our search wizard actually looks like. There's a lot. You start off, and like I say, you start off with the complete universe of everything that's on your specific computer. Now, a lot of people, we've got foreign stocks, we got the London, the Canadian markets, currencies, commodities. You can look over here at the list: Amex, NASDAQ, New York Stock Exchange, all the indexes, futures, mutual funds, the Canadian markets, the London market. Well, I normally don't trade the London or the Canadian or mutual funds, so let's get rid of the stuff we're not interested in trading. So this is one of our choices that I've selected here to get rid of. We're only looking at U.S. stocks. I'm an options trader. If they don't have options, I don't want to trade them. Now, do all stocks have options? No. So let's get rid of the ones that don't have options. All right. We also have price criteria and volume criteria. Volume, I want, in this case, in this search, I was looking for stocks with better than 500,000 shares. Now, generally, why do we want high volume? High volume is important in securities. One time we were at a show and a guy said to me, a low volume stock is just like a roach motel. I said, what are you talking about? He says, you know these little black things that roaches walk into and they can't get out of? He says, that's what low volume stocks are. You can buy them, but you can't sell them. So we don't want to trade those kind of stocks. So you see what we're doing here in our stock search wizard? We're getting rid of all the junk we're not interested in trading. Now, this wizard finds the stocks, but it doesn't tell us timing. Timing is also important. Netflix is a great stock in that January trade, but it's a lousy stock in the July trade. You see, July goes down. We have to know, you know the old Kenny Rogers song, you got to know when to hold them and when to fold them and when to walk away and run. That's what it's all about trading. So we got to know this stuff ahead of time. This is great stuff. So in our software, we've got the 7,500 U.S. stocks, 22,000 mutual funds. We've got Canadian stocks, London stocks. Right now, there's about 3,800 options. That is options less than a year. Actually, it's 9 months is what's defined as an option. So out of our 7,500 U.S. stocks, about half of them have options. And then leaps are longer term options. They go out to about 3 years. We've got futures, indexes. The seasonality works on all of this stuff for the most part. And all of this stuff is stored on your hard drive. Okay, it makes it very easy. If we're on an airplane, we can look at this stuff anywhere. It's just open up our computers and look at the markets. And like I said, the stock search wizard finds the right stocks. The cycle wizard tells us what time of year they move. And there's 22 tutorial videos explaining all this stuff for you. So here's what the cycle wizard, now this is the coolest wizard of all, because it takes our stocks and looks at the seasonal charts and tells us, like in this case, I had made, this one is showing a list by Tom. He had 126 stocks. Well, in January, he had 10 long trades and 3 short trades. It tells him what stocks to trade when. When is the right time? And we have criteria that we put in. When I actually run the wizard, maybe I'll explain the criteria. We need, again, we're looking at repeatable patterns, so we need at least 5 years of information. Say a stock like Twitter or Facebook has only been out less than 2 years. Okay, in some cases I don't have 2 repeatable patterns. I don't know what it normally does over the course of the year. If it had been around for 5 or 6 years, you see, well then, okay, I kind of know what when it goes up and when it goes down. So we do need data, past experiences to tell us when those stocks move. Okay, so any rate, after we use our cycle wizard, which tells us timing, then we have all of our trades listed in a summary. Like here's what we would have seen on Netflix. It would have told us the dates, the time periods, in this case 11 winners out of 11 years, a huge percent return and a rating. So this is our summary. Now, one last thing that I want to show you here, and then because I want to get into opening the program to show you this, but there's one other thing I wanted to show you. Earlier on the three-line chart, I showed you price and earnings on the same chart. Well, what we've done by extending those lines into the future and showing calls and put prices at expiration, we have created another incredible tool to evaluate a trade. I want to show you this. This is great stuff. It's another best choice software exclusive. It's something that we built, and let me show you what it looks like. Okay, here's a chart. This is NCR. We can see price and earnings on the same chart like I showed you earlier. And what I'm going to do is extend these yellow lines out into the future. And here's what it looks like. Okay, we extend these lines into the future, and now I have calls and puts showing at expiration the values of where, let's say these calls, what it would cost you to purchase an option and take delivery of that stock at expiration, what it would cost you. So in the case of NCR, let's say this one January 2015. We bought a call for, I don't know, maybe it was $5 for delivery at $33. Okay, well, if we paid $5 for the option and it's for delivery, and our strike price is $33, as an example, the cost of the stock would be $38. It would put us right here at the center line. The center line would be the at the money. Now, the yellow lines project, this is the growth rate of the stock. Well, if we could buy it here at any of these blue lines and sell it somewheres up here, I mean, that's the pattern that the stock has been showing us. It's showing the future. It's showing us ahead of time, purchasing it here where we expect price to be. Again, it may be above the bands being expensive or below the bands like I showed you earlier here, but we're projecting it into the future. This is cool stuff. I get excited about this stuff because this stuff came from my brain and I'm showing it to you. We put this stuff together and it's exciting stuff. All right. Any rate, in 2010, we had one customer with our software, started the year with a $6,500 account, and in the end of the year, he had $1.6 million. Now, it doesn't get much better than that. I mean, that's incredible. This guy, he's a good friend. We've had him on broadcasts in the past, and he just tells you, just do what we taught you. So you can be successful too using our software. So now I've given you some basic education, what our software is all about. I'm going to go over the price of the software, and then we're going to answer some of your questions. Okay, so purchase options. Now, this is like, you ever go to get your car washed, and you look up on the board, and there's all these different choices. So I'm going to give you some choices here, and it's you tell me which choice you want, because actually this is best choice software. We'll let you make your best choice. Okay, so start off. Here's your choices. Okay, a full purchase. Now this is the full deal here. We're having a cruise. It's a 7-day cruise. This is next month. Okay, and what we're going to be doing on the cruise is we're going to have training. When the ship is out at sea, this is the Royal Caribbean, one of the largest ships ever built. It's just gorgeous. It's a fun cruise to go on. This is the 4th time we've done this, and everybody has had a blast. So you're invited, providing you purchase the software and have the software, and we have training on board. We've reserved the conference room, and we're having sessions, training. So now, with the full purchase, you own the software forever. That we're going to give you 6 months of data and the advanced DVDs. Now, Sonny just left me a note here that there's going to be the cruise is, I guess, a 7-day cruise, but there's 6 days of training on board. Now, you don't have to come, but it's included. I mean, if you want to just sit out by the pool, that's fine. But we're going to be there teaching, and we're going to have a lot of fun. Also on the cruise, we have our day trading as well. Now, tonight I'm not going to be talking about day trading, but we have the best choice day traders who are just absolutely killing the market doing day trading. But that's something different. But they will be on board the cruise too, and you have a shot at them. So this is the full deal. Okay. Now, if you, the next deal is if you don't want the cruise, you just want to get the software. It's just like you go to the car wash and you already vacuum your car. I don't want you to vacuum the car. I've already done that. I don't need that. So you get it a little bit cheaper. So I'm going to give you the deal. If you don't want the cruise, it's $39.95. A little bit cheaper. Now, give you some more options here. Now, if you already own the software, you want a second copy, we sell a second copy for $500. It's not free. And again, these things, we license the computer. It's physically on your hard drive, and we license it so that it can't be copied, or it's just our protection for our product. You can get a second copy for $500. And now here's another choice that you have. Now, if that's too much, we have a 3-month trial. And this is the way a lot of people start. You know, I think even our man that made the 1.6 million, he says, oh, let me just try it. It sounds interesting, but let me try it. And just try it, because we know you're going to want it. We have a 96% conversion rate. Almost everybody that's ever tried it and used it and made some money with it, this is cool stuff. So a 3-month trial, $895, includes the 3 months of data, the tutorials, but it's not applied towards the purchase price. So there's your choices that you have. And again, our office number, it's at the bottom of our slides, like I mentioned in the beginning, 941-747-5858. You can call us. But I know most people don't call us while we're giving the presentation, but by all means, jot our phone number down and give us a buzz. We'll get you all fixed up here. Okay. So much for the PowerPoint. Let's get into the live show. Okay, Sonny just left me a note here. There is only 5 cabins left on board the ship available. We had reserved, I think it was 85, I believe. I'm not totally sure of the exact number, but we had reserved a lot of cabins, and we're down to 5 left. So there's not a whole lot. You got to let us know fairly soon on this. And I don't have the dates here, but we can get that information. It's next month. Okay, let me close the PowerPoint, and now we're live here. Now you're seeing a live chart. This is Netflix. Okay, we can see over here the stock Netflix, the symbol and everything. Now I will go ahead and show you. Oh, Sonny says it's leaving the 17th of May, Sonny? And it's out 7 days out of Fort Lauderdale, Florida. Okay. Here's the live chart of Netflix. Now notice over here the earnings. You see what I'm talking about, this big move afterwards? Now let me drag my mouse, just like I showed you in the PowerPoint, and see over here on the right side of the screen all the different years. Now let me just click on a year and show you how cool this stuff is. I'm going to click on 2014. Now obviously the year is not over yet, but here is the trade that we took this year, and here we are right now. Now if I click on 2013, look at 2013. You see that big jump taking place at the exact same time of the year. Let's look at 2012. 2012, another big jump. 2011. 2011 was cool because that was our first cruise. We were on the cruise ship, and we told everybody on the cruise ship about this trade. And guys were going up to their room, placing the trades. We had one guy come down the next day. He's, oh, geez, thanks, Pete. He says, I invested $3,000. I made $30,000 on the trade. Sign me up for the next 10 cruises you have. And it was this trade right here. This is in 2011. We can see the exact same time frame, the exact same move. Now let's go back a few more years. How about 2010? It did the exact same thing. You see, this blue line is the individual years. 2009, it did the exact same thing. How about 2008? It did the exact same thing. You see what I'm talking about, repeatable patterns? This is, I love this stuff. I mean, I don't know how else to put it. I get excited when I do this stuff and I show people this product that we created. Look at 2006, the big jump. 2005, not a major jump, but it still went up. And 2007 here, it did the same thing as it normally does. So now, okay, I was looking at January. Now I can come over here, click on tab number 1, take that particular year off. Let's say we're looking at Netflix over here in July. Now July hasn't happened yet, has it? Let's drag our mouse. Well, there it's gone down 9 out of 10 years. I have all the statistics over here. It's not as good of a trade as the January trade is, but we can look at the years. 2004, it had a big drop. 2012, it had a big drop. You know, you just click on the years. 2013, it backed off. 2011, it dropped. 2010, it dropped. You see that? This is awesome stuff. So at any rate, this is our seasonal. Now, what you want to look for on our seasonal charts is these big moves. Now, here's one of our favorites, which is Google. Okay. In Google over here in October, nice big move. This is the one where Christopher, the man that made the 1.6 million, he caught this for over $1 million. By this time, he had taken the Netflix trade. I'll tell you exactly what he did the year that he made all that money. He took the Netflix trade in January. He took the Priceline trade, same trades that I took. He took 2 or 3 others, and then by the time Google came around, he had a big bankroll, and he jumped in on 30 contracts on this, and that's where he made $1.25 million on this trade. And he just took it again this last year, had another move. But let me just show you the history on this. 2004, here's where Google was an IPO, and big move up. 2005, big move up. 29 points. 2006, it jumped $50. 2007, it jumped $60. 2008, now 2008 was a lousy year. Remember when the market was crashing? Google went up, just like it normally did. Went up $23. 2009, it went up $37. 2010, now this was the year that he took it, and this was the trade that he caught right there. Beautiful trade. 2011, it happened again. It didn't work last year, but then he took it this year again. He made $250,000 on that trade right there last year. I mean, this guy's excited. He loves this stuff. But it's knowing ahead of time. So seasonality is a fun tool. Now, let me show you our wizards. Let me just show you a Priceline. If you want to look at a different stock, all I have to do is, on my keyboard, type it in, Priceline, PCLN. Okay, there's Priceline on the seasonal, and this is the February trade I was telling you about on Priceline. The earnings comes out. It's going up 12 out of 12 years. What else do you want? I mean, how much easier can I make it for you? You know the percent move. It was 11% move. Now let me pull up the actual trade. We know it was 11%. Let's pull up a chart. I come up here and click. See the yellow and green lines up at the top here, price and earnings. This is what I showed you on the PowerPoint. Let me take the earnings off. Let's go ahead and just look at a shorter time frame. All I have to do is drag my mouse, and we'll come into February, and here's where Priceline's earnings came out and had a nice big move this year. Okay, just like it did in the past. And again, we could see our 3 lines. Remember, I was showing you this earlier on the PowerPoint. Okay, so let's go back. Let me go up to show you a long term. Now, instead of user-defined time period, I'm going to go back to all data. And this is Priceline over that long time period. Remember, I showed you this on the PowerPoint, okay, which is this chart right here. Now, if I show you the upward hook, remember I showed you that in the PowerPoint? You see, all I have to do is click on it, click over here. I'm back to logarithmic scales. This is our seasonal cycle chart right here on Priceline. I showed you that, okay? This is if I want to look at the option chain, I can pull that up. In our wizards, what I want to show you over here is our search wizards. Let's play with those. They're fun. Okay, the stock search wizard. This is what it looks like when you click on it. So I'm going to come down. The first thing, got all these conditions. What I'm going to start with, list by exchange. I click on it, I add it. It shows it up here, and there's my 35,000 securities. Now, I don't want to look at London. Let me uncheck London. I'll uncheck the venture. It's running a little bit slow because we're connected here with the on the broadcast. But you can see as I uncheck those and remove them, I've eliminated 6,000 or 7,000 securities. Let's eliminate the mutual funds. the futures, and we're down to about 7,000 securities. Okay, we'll leave the indexes in there. Next thing, like I said, I'm an options trader. If they don't have options, we have options available. That is a true-false question. Does it do these 7,000 securities have options or do they not? Let's add that in there. Okay, we just knocked out half of them that don't have options. Volume, remember I said earlier, volume is important. Let's add the volume in there. Okay, so here's our volume scroller. Okay, and I can move it up. I don't want these low volume stocks. Let's move it on up. See this? Get rid of a whole bunch of securities. I don't want to even look at them. Let's bring our volume up to about 500,000 shares. And there I knocked out another couple thousand securities. Volume's too low. And last but not least, we'll put on price, the current stock price. Add that in there. And okay, I'm not going to be trading penny stocks, so I don't know what you like to trade. This is a cool tool because you can put in whatever you want, not necessarily what I want. So it's you select the kinds of securities that you're interested in finding. Whoops. Okay, give it a minute here. Here we go. Okay, so let's move this on up. Let's say we don't want to look for stocks under, I don't know, bring it up high, $50 or so. Let's get it down to a couple hundred stocks. I can move this, again, see I can, when I'm clicking on that upward arrow button, I'm eliminating securities. Let's get it down to about 200 securities. Okay, there we go. 200 securities. I've taken you from 35,000 down to what I consider, what I'm looking for that I consider as great tradable stocks. So I'm going to save it to a list, and we'll call this, it's good to date your lists because they get old and you can make them as many as you want, but we're going to call this 416 semi, whatever, and save it. Okay, so now we can come over here. The search wizard has done, I found a couple hundred stocks that I think are good trading stocks. So let's close the stock search wizard. I can come over now and select the list that I just made, and I'm going to sort the list by their symbol. Let's see, where are we here? Oh, I'm going to scroll up to the top by the symbol. So, okay, there's Priceline. Priceline is in this list of stocks. It's one that has it's a high-priced stock. It has high volume. It has options. It's on one of the 3 exchanges. It's one of those securities that's in our list. So what we've done, we've started off with a group of great tradable securities. The wizard has done its job. Now the next thing we're going to do is use our cycle wizard. That's this pink guy over here. So I'm going to click on the pink guy, and here's the list that I just made. Remember, there was 189 securities. Now, I have no longs and no short trades. The wizard has not done its job yet. And what we're going to do, I'm going to start the wizard, and it's going to save all this information for me. This is just telling me what I'm saving it to. And it's going to go through all of our securities, our 189 securities, one at a time. And notice, you see how it's filling in here? I found a trade in January. I found a trade in February, March. It's filling in for us all of the longs and all of the shorts. Right now I don't have any shorts, but I'm finding lots of long trades that it's going through my list and going to tell me what time of year my stocks move so I can trade them. All right, it doesn't take long. Over here, the conditions, I want at least a 90% win factor. That means 9 out of 10 years or 10 out of 10. 8 out of 10 is not good enough. I need the 5 years of history, minimum rating. I don't know whether I have time to talk about that tonight, but it tells us whether it's a good trade or a lousy trade, and the time frame. So, okay, the wizard has done its job. We found the trades. The seasonal wizard has, now let's see what, we got 7 trades in January. Let's take a look at what those 7 trades look like. Okay, so I've used the stock search wizard, I've used our cycle wizard, And now let's see what trades we're going to take a look at here. Okay, so here's our list. Let me pull up, oops, you can see I've done this many times before. And here's January, and lo and behold, what's the first security coming up in January? Netflix. There it is. Remember I showed you that in the PowerPoint? There's all the information, and I can just click on it, and it pulls me right to the seasonal. It shows me that information that I was showing you earlier. Okay, but there's other trades. This button is a little bit annoying, comes up. Price line. Here's the price line trade. Let's click on price line. All right. Bingo. There you go. See it? Easy. Makes it easy. Okay. These are all stocks in my 189 securities that I like to trade. And I've made a lot of money with them. We can go to a different month. Let's take a look at, now here's one thing interesting. Notice there's lots of trades this time of year. This is a good time of the year to trade. There's lots of trades in the fall. Those are your two best times of the year. In the summertime, the market's a little bit slower, so there's not very many trades here. Let's take a look at something in October. All right, well, hey, there's our Google trade, okay? You see how he found it? Click on it. There it is. There it is. Remember, I showed you that earlier. It's in our October trades. Google is a high-priced, high-volume stock. It's a great trader. You know, easy. So I've showed you, we're approaching the hour point, and I want to answer some questions. I've showed you using our wizards. I've explained the software to you. At this point in time, if there's any securities you would like me to show you, send them into Brett. Brett, are you there? I don't know whether Brett's listening, but okay. Yeah. Is there any securities that any of our people would like to see? Yeah, I just was going to show them on the chart. You see on Google, I've selected this time period, which is not a good trade. You see, this is a short, but it's only occurred 6 out of 9 times. The rating is pink. That's a lousy rating. Don't take the trade. Maybe over here. Yeah, if it's a green, green are the best ones. Notice the rating number is a lot higher, 9 out of 10. Let me see if I can find a blue one. Here's a blue one over here. Blue one, we got 3 colors. We got the pinkish or reddish, whatever it is. That's a lousy trade. The blue ones are a little bit better. I still don't like taking blue trades. It's 7 out of 9. The green ones are really the best ones. All right, what other kind of questions or securities would they like to take a look at? Okay, I just type it in. There we go. Now we can see on this stock, this security, we've got about 6 or 7 years of data. We can see like in May, typically it drops off significantly. I can drag my mouse over this time period. 4 out of 5. If I've never looked at something before, what I like to do is just drag my mouse over the whole entire year. This is really cool. And it will pick out the absolute best trade. And in this case, it's September. September is your strongest time, 5 out of 5. You got about a 17% move. We got the dates there for you. Good trade right there. That's probably the best trade on this particular security. AMGN. See, I never know what they look like. Each one is different. And that's the beauty of what we've built here, because you just don't know. Now let me show you something about AMGN. Notice over here we see no blue lines up here. That it's never ever hit a high this time of year, but it is moving in July. July is the strongest time of the year on AMGN. Again, let me just go over the whole entire year and see what we see. And it's right there. July is the trade on AMGN. 12 out of 13 years. Okay? Rest of the year, I mean, I wouldn't really fool around with it over here. There's not much major movement. You want to look for the big guys. You know, you have a choice. If you're fishing, don't you want to catch the big fish? What are you going to do with all those minnows? You know, use them as bait or something. Catch the big fish. That's what we're after. Okay. Anything else, Brett? MSI. Okay. All right. What is this easy or what? Look at Motorola over here. Okay. I'll drag my mouse. I'll do it again. You know, if it's not, there's the year. Okay, over here, it's showing me here. Now, that's a little bit of a surprise. I would have thought maybe over We're here, but let's see what we got over here. That's also a blue trade. The best trade on this is a blue trade. So Motorola, your profit amount is very small. Sonny left me a note too. Also on the cruise, it is a tax deduction. So I know a lot of people here, it's maybe a little bit too late this year, but next year you can take it. So certainly that may be a consideration for everybody. But one other thing too I wanted to show you, look at how all the blue lines are shifting upwards at this time of the year. You see how it's basically generating that information that we're seeing here? All the blue lines shift upwards. That's when the stock is moving. How about, let me show you a commodity, just for like stocks, generally we have 10 years of information, but commodities we have 50 years. Now, why do we have more information on commodities than stocks? Well, stocks change. You know, if I asked you, let's say a bushel of wheat 50 years ago is exactly the same thing as a bushel of wheat is today. There's no difference. It's the same thing, same commodity, looks the same. Now, a share of stock, a share of Apple today versus a share of Apple 10 years ago. Are we talking about the same company? No, it's changed. So if I pull up wheat, now wheat is kind of interesting because in the summertime, all the farmers are harvesting billions of bushels of wheat. And what's the first thing they want to do? If you were a farmer, Brett, what would you want to do with your wheat in the summertime? You want to sell it. You want money. I mean, we all want money, right? You got all this wheat. I don't want it. Give me money. All right, but okay, go ahead. I know you're monitoring. We're just having fun this evening. But hey, look, they're all wanting to sell it. Now, if everybody's trying to sell it once, supply and demand. Okay, there's a huge supply hitting. What do you think prices are going to be, high or low? They're going to be cheap, right? Everybody's trying to sell. So what do we see on the wheat market? First of all, July is the absolute worst time of the year. Okay? Look at all the blue lines. Look, I got 50 years of history. I can look at all 50 years of wheat if I want to. But where does wheat go up? Now, you may have never, ever traded wheat in your life, but I'm making you an expert in 2 minutes right here. There is your big move on wheat to the upside and big move on wheat to the downside, I'd say right over here. Okay? Okay? You never traded it before in your life, but you're now an expert in 2 minutes by looking at the charts. This is incredible. All right, what else we got, Brett? All right. Well, look at that. How about that? We'll just drag our mouse. And there we see where it collapses in July. 12 out of 13 times it's gone down. Look at all the blue lines shifting downwards that time of year on Yahoo. Again, I'm talking about trade, what is this, 3-4 months from now? You see what I'm talking about? Looking into the future, knowing ahead of time when things move. If you don't have this tool, you're blind. This is the best software. We go to shows and we're showing our software, and I tell people, go look at what everybody else got. They can't hold a candle to what we've got here. You know, for $8.95, this is, just try it. You'll love it. You'll make a fortune with this software because you'll know when things move. If you're a trader, you know, years ago, we built this as a stock selection software. Okay, you can look at all the different stocks because people, you know, 20 years ago, we're not really there weren't that many option traders, and there weren't very many stocks that had options. I can remember when less than 5% of all stocks had options. Now it's greater than 50. But back then, everybody asked me about stocks. Now when we go to shows, everybody wants to make quick money. They want to know about options. And you can be the greatest option, have all know about all the spreads and vertical spreads and calendar spreads and condors and back spread ratios and all different kind of strategies, but it all boils down to one thing. What's the stock going to do? You better know that first before you even think about putting an option trade on. What are you expecting to happen? And that's where we come in. So we're not a brokerage firm. We don't take your money but we help you make, and as far as options, you can go to Optionetics or get all kinds of great option trading, because there's good training about how to trade options, but you still need to know this information, because this is where your profits start. In the future, if we look at the future, there's only two things that can possibly happen in the future. And it's not things can go up or down. Here's what can happen in the future. Either we have a repeatable pattern, like we know when Christmas is going to happen, and there's lots of great stocks that respond to that event that takes place. I can show you Coach, C-O-H, okay? Coach, retailer, just before Christmas, it's gone up 13 out of 13 years. There's a great trade for you. Why is Coach, it's a retailer, going up just before Christmas? Does that make sense to you? You see, it's responding to these events that are repeatable. Okay, so that's one thing that can happen in the future. Repeatable patterns, and that's what our seasonality is based upon. Repeatable. Earnings reports are repeatable. Now, how about if I asked you, well, when is the next earthquake going to hit New York City? I have no clue. Even if I ask you California, I don't know when these things happen. They're not a repeatable thing. And so when is the Fed going to raise interest rates or lower interest rates or do all these crazy things? When's the government going to do some? I have no clue. I don't trade based upon the things I don't know anything about. Keep your trading simple. That's things that you understand. That's where you're going to make your money. So don't focus. Don't try and guess the unknowns. Some crazy thing is going to happen. It could happen, but it could not happen. So let's focus on like Coach, that's happened 13 out of 13 years. Before Christmas, it makes sense to us. That's how seasonality comes to work with us and helps us be able to predict the future. Okay, what else we got, Brad? Okay, AIG is relatively flat. AIG is one stock I will never forget 5 years ago. Let me tell you a little story about AIG. You guys will probably like this. Back when the market was crashing, AIG had been like a $200 stock and was down to like $1.25 and heading south. And the government stepped in with a $190 billion loan to AIG. And I thought, well, I mean, $1.25, I should buy a lot of shares of it. I mean, the government, I've never owned a company that the government loaned me $190 billion. Just the thought of that I thought was pretty cool. And then I thought I'd look at the options. And I found the calls. Now, this was in February, and the April calls, the $3 calls, were selling for $1. I thought, I can't believe what I'm seeing. Wait a minute. I'm going to sell some of those calls. I'm going to have covered calls. A stock cost me $1.25. I get $1 back on a $3 call. If you want to take the stock away from me for $3, you can have it, because I only got $0.25 in it. I just 12 times my money. I mean, it was absolutely incredible stuff that it didn't make any sense to me, but hey, it's there. I'll take advantage of that. And it didn't. And so that was my AIG story. But certainly, it was neat. These things happen. Yeah. No, it's not. I normally don't do covered calls, but I thought, well, it's there. They're giving you money, and maybe that's the way the government planned it. They just planned to give you. The government does some strange things, but just the thought of owning a company that the government's giving you $190 billion was cool. Okay, AIG. Yeah. 12 out of, again, because, yeah. Uh, yeah. One point too I wanted to bring up too, when you were talking about that last question on do we do just the earnings plays, or do we look a longer time frame? Some things like the earnings are a specific event that causes an immediate price movement. Now, when you talk about another repeating event like Christmas and that Coach move, well, it's going to happen before Christmas, but exactly when? Your timing isn't. It's more of a a time period rather than overnight. You see the difference when we can kind of pinpoint the event, that this event, like for example the Hershey trade on Valentine's Day. Well, we know when Valentine's Day occurs, and that's a repeatable pattern. That happened 18 out of 19 years. And that's one even Hugh took when Hugh is our day trader. And when we first met him, he walked by our booth all the time. He said, I don't, you know, he didn't believe what we were doing. But finally he came in, bought our software, very first trade, the Hershey trade, because it was in just before Valentine's Day. He went from an $11,000 investment. I think he made, I don't know, 20 some odd thousand his first trade, and then his first 2 months, I think he made $250,000, and it made him a believer pretty quickly. So, but that is a one-day event, you see. So we have to look at what's causing that movement. Is it a time period type thing, or is it an overnight type thing? And I think that answers the question a little bit better. Okay, I got it there. And also too, we had a note here that Hugh is going to have a wild weekend in his day trading. His wild weekends are, yeah. Yeah, let me tell you about his wild weekend. I think it's coming up the third weekend, I believe here. I don't know. Maybe Sonny can get me the exact date on that, or you can call Hugh on that. But he has a 8-hour training session. Is really intense on day trading, because day trading is a specific animal that you're in and out very quickly. He's very good at it. It's the most intense type of trading that there is. What we're doing here is pretty laid back and pretty tame. I mean, bottom line is making money. I mean, I love all kinds of trading, but to me, hey, play the easy games. That's the way I always look at life. If it makes sense and it's easy, do it. You know, when we look at seasonality, somebody was asking me about the currency market. And I says, yeah, it has some seasonality, but I don't know what the two governments are going to do. You got these pairs. What does the U.S. government do something every year at the same time, or does the British government? It's kind of it just the patterns are relatively flat. It's a very difficult game. I don't want to play that game. I want to play the easy games. You know, that's you're just trying to make money. Why make life difficult? Do the easiest thing possible. Just make money. So anyway, his wild weekends are really great. It's really intense training, and it's good stuff. All right, we're getting near the end here. I think we got to wind it up here at 9 here. And we've seen, you know, in my experience, at least in the 16 years with Best Choice, how the market has changed so dramatically that the options market has absolutely exploded. People love this stuff. It's fun. You know, initially people were afraid of it. It's risky. Actually, you can minimize your risks by trading options. And so we've learned so much. We've gotten better at teaching, better at building the best software out there. And so, hey, for $8.95, give it a shot. It's a fun tool. I know you'll enjoy it, and it will help you certainly to become a much better trader. Well, I think with that, I think we've exhausted pretty much everything for this evening. I'll leave our slide up. Can you see it there okay, Brett? Brett? All right. Well, I guess maybe Brett's already, he might be in. Oh, okay. We got the main screen up there with our phone number and everything for people. Again, we're ending the presentation, so give us a call. Our website is there. You can go to Best Choice Software, download a free demo. You can. I mean, the demo just has old data. You really can't trade with it, but at least you can play with it and you know, push the buttons and see how all this stuff works. Do this sort of thing that I've been showing you this evening. But by all means, give us a call. We're here. We'll be here for a while yet this evening, and we love to talk to our customers. Okay, thank you now, and good night.